Welcome to Insurance Suits, a podcast brought to you by AIMCO, the American Association of Insurance Management Consultants. I am Chantal Roberts.
Hey, I'm Amy Johnson.
How you doing?
I'm doing well. It's a Friday. I like it.
Yes. Woo! Yeah. So yay, us. I have no idea if this podcast is going to be released on a Friday, but that's
I
okay.
just realized that as I said it.
Welcome to the Insurance Suits Podcast, a bi-monthly podcast brought to you by AIMCO, discussing the issues and the people who are involved in insurance. The views expressed by the moderators and guests represent their own views and opinions, and not necessarily the views and opinions of AIMCO, Insurance Suits, or its advertisers. It's all right. But you know when what this is, I don't know if you know, but it is the season for us to start thinking about taxes and business stuff, doing our business taxes if we're
Right.
a business owner or whatever. And I know a lot of people who listen to the podcast and watch the podcast too. So this makes me think of course, the importance of business interruption and extra expense, or business income and extra expense policies.
Well, and here's the thing. Everyone is so sick of hearing business interruption in the legal world because of COVID. And frankly, I don't even want to rehash that stuff. It's been talked about and discussed, and whether there's coverage, whether there's not. But the importance of it, even with small businesses, can be critical when you have a loss. So I'd love to talk about business interruption today.
I tell you what I am concerned about, and this was me when I lived in Little Rock. I spoke at the Small Business Association. They had a startup in a day, like little learning thing, and I basically bullied my way into that presentation, as I am wont to do, and because I said, listen guys, we need to talk to these business entrepreneurs who are starting their businesses about business interruption, business income losses, because as an adjuster, I see when a small business doesn't have business income policies so that their business gets burned down or whatever, that they don't have a way to start up business, work again quickly. And so their business is down for 3 months. And I said, how do you then pay your mortgage on your house if your business isn't paying you? How do you pay your electric bill? How do you put shoes on your kids' feet if your business isn't making money? And they're like, you can see it just wash all over them. They're like, oh my God, I didn't know that I needed this. And I'm like, I know you didn't know. And one of the reasons I feel is important is that, of course, we should be talking about this to our small businesses. And I realize that maybe there's small businesses listening to this, but also our agents and our producers, our brokers, they should be talking to their clients about this.
Well, absolutely. And part of the problem I see, especially even with agents, you have to know what it is. You have to know the product. And I'll tell you, when I first started doing, my background was, before I went in-house, was general liability coverage, specializing in bad faith, failing to settle within policy limits, duty to defend, duty to indemnify issues. I really never got into the property component until I became the director of property and casualty claims. And, Katrina and Wilma hit, and I'm taking over all the hurricane litigation. So I had no idea what business interruption really did. It was easy to learn the purpose right away, but the calculations, how to determine what the amount of business interruption, I had to learn all of that.
Yeah,
And, of course, read the policy and apply the terms, right? But I'm not, as soon as a math component gets introduced,
I think it,
I'm kind of, and
I think it
so the business
intimidates.
interruption, it is incredibly intimidating at first glance. The policy form is lengthy. It's, got formulas and calculations, but the coverage can be critical to a business. And I learned early on, you can retain a consultant or an expert to assist you in making the calculations and how to make those calculations.
And that's a good point. When I was a claims adjuster, I would often hire forensic accountants, and there's no harm in that, either for the insured to hire his or her own forensic accountant to help with that. So
Mm-hmm.
let's talk real quick about the policy and some of the things, because I think you're right. I think a lot of people are intimidated by it, by just the math, so they just start tuning it out, and they don't realize that you, as either the agent or the insured or as the underwriter or something like that, don't necessarily have to do the math. You can hire a forensic accountant for that, or a consultant, for
Mm-hmm.
that, and even as a claims adjuster. But yeah, I agree with you. I think that a lot of people are intimidated and simply don't know what it all covers. So I want to give a plug, though, to one of our experts. Actually, he's a consultant, I guess, but he is an expert. He's a topic. Let's put it this way: he has forgotten more insurance than you and I know put together, and that's Bill Wilson. And
Mm-hmm.
he we got to get him on the podcast. But anyway, he has written a book, When Words Collide, and he talks a little bit about business interruption. And then he's written another book when this whole COVID stuff hit. And
Right.
one of the things that he was talking about was the insuring agreement for business interruption. And hopefully I'm not going to misquote him on this, but this episode of Insurance Suits is sponsored by the American Association of Insurance Management Consultants, or AMCO, a nonprofit trade association comprised of insurance and risk professionals ranging from actuarial, underwriting, acquisition and transactions, and adjuster, agent, and broker standards of care. Find out more at www.aaimco.com. But basically, your business interruption policy will cover for interruption to your business, or suspension of your business, or even like a downturn in your business from a
Mm-hmm.
covered cause of loss. And and I think, of course, when we talk about COVID, that's where a lot of this gets back into. It goes all the way back to that covered cause of loss. And you and I are just talking, I guess this is our legal disclaimer here. We're just talking about the standardized policy with no special endorsements or anything like that, because I mean, you could get some endorsements to change things and all that. But I know that one of the things that needs to be done is that the damage should be related to the structure, or the covered cause of loss, because that's where your business is going to be at. I mean, that kind of makes sense. So it kind of like reverts back
Right.
to a base policy, although the business interruption policy doesn't say there has to be physical damage to that structure. But because it could be just that the police have roped things off or whatever.
Well, but for the most part, I there still has to be physical damage. Like it might, I think it would have to be physical damage to the building next door that causes
Yes, that's, yeah, for
your
the,
inability to access. So, and that's, there are policies like event cancellation policies, for example, where there is coverage for things for business interruption without the physical damage, but that's because an event policy,
right.
it's
It's a
not
slightly
a
different policy.
building,
Mhm, mhm,
it's an event, not
mhm.
not a property.
You know,
So there's reasons why there might be coverage for that, but on a typical policy that includes business interruption coverage, there has to be, for the most part, some kind of direct physical damage
absolutely.
that leads to, it can't be business interruption standalone.
Absolutely, yeah. So one of the things, and a lot of people do not realize this, that it can help with the downturn. And this is where a lot of math gets involved. To give you an example, you know that my husband is a claims adjuster, and he is handling a business interruption claim right now with one of our experts and consultants here, Scott Bushnell, and we should
Scott.
love Scott too. We
Scott
should.
is one of my most favorite. Scott is one of my most favorite people. That guy is so generous with his time and knowledge. It's
I
incredible.
I am hurt. I thought I was your most favorite person. I'm hurt. I'm.
As far as forensic accountants go, he's my
Oh,
favorite.
oh, okay. All right. Okay, good. All right. Now I'm kidding. I'm kidding. No. So anyway, my husband is working with, a forensic accountant on this, and again, most people and even agents don't know that the policy has what's known as a time deductible or a waiting
Right,
period. It's a 3 days,
right,
72 hours is what it is. And so, it's just like your monetary deductible, $500, 1,000, whatever. And in this particular instance, the claim that my husband is working, the insured was able to get everything back up and running in 2 days. Okay, that's still within your time
hmm,
deductible. But then there was a downturn in business, I think for about 30 days. So basically, you cut off that downturn for one day, and then what's that, 27 days that they're having to figure that downturn in business. So a lot
right.
of people don't realize that. And again, when I was talking to these business owners at this small business association, startup in a day class, I'm like, it doesn't have to just be that your building burns down. It could be that if you're in manufacturing or something like that, because this is back when craft beer, was microbreweries were like really big and all this kind of
Right.
stuff. And like if your tank goes down and you have one of three tanks or whatever, and then it takes 3 months to build that yeast back up and yada yada yada, blah blah blah. What are you going to do for those 3 months?
Yeah, and the business interruption is designed to put you back in the position that you would have been in had the loss not occurred. So
Mhm.
you don't get to profit
Right. Absolutely.
off of it. And the way to measure it, you look at past financials, and
Yes.
that's where I start getting lost. Um, because I struggle. I struggle with that component of it, and I'm a slow thinker. So
Hmm.
it takes me a while. Sometimes I'll read the policy form a couple times or 3 times, and I'll diagram it out. What do we need to do? What do we need to have in order to get this coverage triggered? And now how do we determine the loss? And frankly,
Absolutely.
sometimes I just have to go to someone like Scott Bushnell, who
Yes.
um, has been doing this for a long time. I've got a great friend who is also at another forensic firm, and he's one of my go-to people as well, because not only he'll always step in and help me out, but they're incredibly knowledgeable. And like Scott, along with he's I think a shareholder at Meaden and More.
Mm.
But, like, get excited the way I get excited about insurance coverage.
Yeah.
So
They're
they'll
math
sit
nerds.
down and they'll dummy it down without the dummy.
Yeah.
And so, and to be able to explain that and for me to go, okay, yeah, now that makes sense to me. Scott is phenomenal at doing that. And to be able to explain when I say, but I don't get this.
Hmm.
He knows how to relate it into the policy form. Like, Amy, the policy form says they get lost rent value also. So this is how I calculated that.
And that's it. Because I know the thing that has always tripped me up when I was working with a forensic accountant, and this was even going on during COVID when the government was handing out the loans to small businesses and everything. I personally didn't apply because I wasn't making a profit. So I was like, well, I'm not necessarily losing anything. And I would rather that money go to somewhere else. But my accountant had said, well, technically you could, because the government is good. Anyway, point being, not about me, but the point being is that even if you're losing money, like you have a loss, you still have continuing expenses. And if you've paid, or the insured has paid that premium for the continuing expenses for that policy, the business interruption, business income, and extra expenses, and he's making a loss or she's making a loss, then the policy can still respond to that, as long as it's extra. And that's the other thing that needs to be really explained well to insureds,
Yeah.
is that, okay, it's got to be extra. It's kind of like my big beef with some policies or some adjusters is that they don't necessarily explain, like in homeowners claims, like additional living expense is additional living expense. We talked about this. It's not a vacation.
Well, yeah, and when you have a loss, the way I look at extra expense, you're not going to get reimbursed for things that you already pay for the most part. Of course, policies get tailored differently. So your utilities, that will get factored into the business interruption portion, but it may not go into the extra expense. Extra expense are the things that you did affirmatively to get yourself back up and running faster than it otherwise would have been. So if you have to rent a truck
Thank you.
in order to, or storage space in order to move equipment, or you rent a new location for a period of 3 months so that you basically are minimizing your business interruption loss. Sometimes it takes a little money to do that. And that's how, in a very generic way, I explain the extra expense. It's different than the business interruption, and it serves a different purpose.
It does. And I think we, or agents, or the insurance industry as a whole, are doing a disservice if we're not talking to the insureds about that potential exposure and risk, because again, that's what we're here for, is to help our policyholders. And one of the things, again, coming from a claims point of view and explaining the policy that insureds don't necessarily understand, and this can help agents to explain what may happen. And this is one of the reasons why, you want this policy or whatever, or this is what could happen in a policy. One of the things that I was talking about, again, to these small business owners was, okay, again, you've got this brewery, and it takes 3 months to get your stock up and running and all of this kind of stuff. I, as the insurer, can have you go to basically your competition and rent a tank from him or her to get your product going. You're not going to have your total amount, so you would have a reduction. So, but I would pay for the reduction. And again, the point is, CMR Consulting proudly sponsors the video recording of insurance suits. You now have a choice of watching or listening to the podcast. Go to YouTube and search for Chantal Roberts or CMR Consulting. To think about, what would you do if there were no insurance? If there were no insurance, I don't think the insured would just sit there and twiddle his thumbs and throw up his hands and for 3 months or whatever, until the building is rebuilt or till his stock comes back in or what have you.
Well, it's just like service interruption coverage, which is different, by the way. Like the chain of.
I wanted to talk about that. Yes.
The supply chain. When the supply chain is disrupted, that is different than business interruption coverage. But the concepts are kind of the same. When someone else's business goes down or an entire industry goes down where your product is, that's some supply chain insurance coverage, where business interruption is more tailored to something that has happened to your own business.
I did want to talk about that. I'm so glad. I mean, we are like so in sync. We're so copacetic, because I wanted to talk about this because I think, again, this is a great idea. And this actually happened, I guess it was about 2007, 2017 or something like that, is when a huge tsunami happened. And I don't know if I was talking to you about it or maybe my risk management students or whatever. And it hit Japan. And it damaged a lot of car manufacturers and part manufacturers and all of that sort of thing. And so Detroit, bless you. So Detroit came through and they were having issues because they couldn't get these parts in for the cars, right? From Japan, because their manufacturers in Japan were not working. So they started putting in business interruption claims. They were getting denied because the damage wasn't to the Detroit, buildings. There wasn't a covered cause of loss. So what they needed, what they needed was what's called contingent, business interruption. So what you are is a contingent, or a dependent business interruption, because you're dependent on someone else. And if that business goes down, then, and of course, this also goes to, don't put all your eggs in one basket. Maybe get South America or someone to make your car parts, or, some from Japan, some from South America, some from, Africa. I have no idea. Anyway, that's not the point of the podcast, but so that it's a perfect example.
Yeah, the contingent business interruption is different. I'm glad that was kind of the phrase I was thinking of. The contingent component of it is a different coverage grant than a general run-of-the-mill business interruption.
Yeah.
And how it's triggered is different than requiring direct physical damage. It's the contingent part. Coverage is more like the event cancellation, where you're not necessarily, I don't think, I'd have to go back and look at the form, obviously, whether or not there has to be direct physical damage to your supplier that can happen, but I don't think so.
I've never worked a contingent business interruption claim or dependent property business interruption claim, but it brings up a good point. Like, what kind of documentation would our insureds need to show to the agent so that they get proper coverage and that they're not underinsured? Because that's another thing that Bill talks about. And I would love to pick Bill's brain about this, about the whole underinsurance problem that we have going on in the United States insurance scheme right now. But also what the adjuster is going to ask for. And going back to kind of what Leslie was talking about way back when, proper communication, if the agent and the underwriters are talking to the policyholders about what's needed, there's not a shock then when the adjuster comes in and talks about what's needed, which again, would put everybody on the same level and dare I say, maybe lessen the loggerheads or the anger, and maybe even put us out of business. Which is
Right. That's what Fred Fisher was talking about when he was on in December. Fred was
yeah,
talking about the not only documentation, which is a consistent theme in these podcasts,
yeah,
but communication, and not just communication with insured and carrier. That communication has to start with the agent and the insured. And Fred made a good point. He talked a lot about the fact that the insureds may not know that they need certain coverages. It was his view, I hope I'm correctly paraphrasing, that offer, give options, let the insured know that there are options out there for coverage. Now, they might reject it. And then, of course, document that you've made that
document it.
offer and
Yes.
extended that. And document it, and then it's really not the agent's call to decide what coverage is best in all circumstances.
Hmm.
It can be sufficient to make the offer. As a lawyer, I do that all the time with my own clients. I give them the options. Here are the settlement options. It's not my call to make this for you, but I also want you to know that there are two other ways we could get this resolved. And allow the insured to make that decision. And that's the same with placing a policy. Give the options to the insured on business interruption, employment practices, liability, a lot of different options. Explain why you're giving them these options, which of course brings us back to the first point of this podcast, which is know the product.
Exactly.
You can explain. And then let the insured make the call. If they're going to choose to be underinsured or uninsured on a component of their business, boy, I sure would want to have made sure that they knew that there was a way to fill that gap.
Right. So very quickly before we wrap up, I would say some of the things that we'd want to talk to our insureds about would be, what you have to prove, just like anything else. Again, documentation. You're going to have to prove that this is what you make. So the adjuster, if there was a claim, God forbid that there was a claim, but if there was a claim, the adjuster's going to need to see, your tax forms or your
Profit and
payroll.
loss statement, your
Yes,
general ledger, your
right.
payroll, your operating expenses,
So,
your
so what
continuing
the
operating
agent,
expenses.
yes, absolutely. So what the agent is going to want to ask for is those things as well, so that they can work out, and the agent doesn't have to get someone like Scott to figure things out, but then look at the profit loss statement with the insured and go, okay, worst case scenario, you'll be out for, I don't know, 6 months. So let's do 6 months business or whatever, but
Mhm.
yeah, so we should wrap up. But let's get Scott on for our next
Let's
podcast.
talk to Scott about this. I'm telling you, anyone who listens to Scott Bushnell will be impressed with his knowledge, his commitment, his passion, and his explanation of what he does and why it's important.
Absolutely.
Let's get him on.
Oh, great. Okay. So I'm going to wrap it up. This is Insurance Suits Podcast. I'm Chantal Roberts, and I'd like to thank my co-host, Amy,
Thank
We'll be
you.
we'll be back in 2 weeks. We're going to bring Scott on, Scott Bushnell. He's a math genius, and please be sure to like, follow, and subscribe to our podcast on your favorite distribution channel. Give us a review, preferably a 5-star one. If you need an insurance consultant or expert witness, go to AIMCO, www.aimco.com. Or if you are a consultant or an expert witness, go to our page to learn more. We'd love to have you.